my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bearish black crow yesterday, a second one if you count the previous session's indecisive spinning top. This was the first real definitive move for over a week, as prices had formed 5 earlier consecutive indecisive patterns. I'm hoping this now means the unusual prolonged indecisive action is coming to an end. We nevertheless still have overhead the recent 50% Fibonacci line at 119 3/4, and above that the flatlining long moving average currently at 120.04, whilst below we have the June 2018 high at 118.51 and the continuation trend line creeping up from the old December 2019 to May 2020 lower diamond uptrend line. That's currently at 118.54. We also have a couple of lesser Fibonacci levels at 118.97 and 118.87, but I do not think they are currently very influential. So far today, well, not much. The market tried back up out of the two lesser Fibonacci levels at 18.97 and 118.87, but didn't seem to like that as an idea and has reverted to stay back in between them. Cable, aka sterling against the US dollar. A bearish opening black Mariposa yesterday as the market takes another step below and away from the main pattern has been guiding this market higher since last September, and that's the June to September 2020 bullish shift pitchfork. Now, I have retired it today, and it is strange sight and feeling not seeing it there. Overhead we now have the flatlining medium moving average currently at 139.51, whilst below the market is moving in to test last week's low at 137.84. However, I think the low is the echo from a failed attempt at the May 2020 today uptrend currently at 137.72, and that is where the real support exists. Overall, this adds support to an idea I'd recently put forward of a possible very large Adam and Eve type double top formed over this year. If this continues much more, I'll have to start looking at potential targets on the downside. Now, so far today, nothing much, either side of yesterday's close and still within yesterday's range. Euro sterling, a higher but still indecisive spinning top based on the short moving average currently at 85.83 and causing the market to test higher towards the significant overhead resistances made up of the upper bear channel line of the recent bear channel, that's between 85.19 and 86.08, plus the paralleling nearby partners of the medium moving average currently at 86.16 and the short medium moving average currently 86.18. This doesn't help in my recent decision to leave target X as a downside target for the roof stroke half diamond pattern in the 85.25 area. Anyway, so far today a very cautious attempt back up at the variety of overhead resistances I've previously listed. Once again, the base action is off the flatlining short moving average. This continues to look more like a serious attempt higher at the overhead resistances than early ones, yet it is still a very, very cautious approach. US dollar against the Indian rupee. A small but higher indecisive spinning top yesterday. A third bullish white soldier as well, and a follow-on, if limited to the previous session's also small, combined bullish engulfing pattern and bullish opening white Mariposa. This was the second consecutive close over the 50% Fibonacci line of the February to April 2020 move at 74.26. This is more than last week's higher yet failed attempt that managed to do. It's really done much more and is now seriously questions the important overhead limiting force of the 74.40 level, which I've gone to great depths about speaking. Again, it is at this point I wish once again to remind you, dear viewers and listeners, that I mentioned 4 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as 74.40 area and still keep the bearish incentive. Please note that 74.40 is not, repeat, not a target. No, it is a limit to the move higher, if and only if the market wishes to still keep the bearish incentive. So it's not like you haven't been warned about it in recent days. This second attempt higher is a serious threat to that limit. Now, so far today, Much lower open, below the 50% Fibonacci line, but an immediate move higher over that 74.40 level and halting at the lesser Fibonacci level at 74.46. We look right now like a bullish opening white Mariposa, and it's actually quite a serious threat to that 74.40 area. The next serious resistance beyond that is the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. US dollar against the Brazilian real. A bullish white soldier yesterday, but what I find strange is how it was contained within the previous session's indecisive spinning top. I suppose you could call it a type of two-day bullish kicking stroke meeting lines pattern, but that is such a stretch too far for me. Anyway, the topside was capped by the 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. The same resistance was seen this week and late last week. Overall, the market has stalled in its movements towards fulfilling the two often mentioned bearish scenarios of a large bearish halfway hesitation and a more recent bear flag. We have target X in the 482.80 area. This is a provisional and preliminary target for the whole mid-April to date action being the bearish halfway hesitation pattern. Additionally, we also have a small bear flag action since late May with a target X1 for such a pattern in the 475.5 area. Personally, I am starting to have doubt on the market reaching target X1, as I think the bear flag idea is becoming flawed and unwound. Meanwhile, further overhead, we have got a lot of fairly big congestion area between 5 even and 511 even, whilst further below we have the 50% Fibonacci line of the July 2019 to May 2020 move at 484.26. Now, one final thing to point out, we have a dead cross of the medium moving average, currently at 539.63, down through the long moving average, currently 539.67, so literally just crossed over. This is a lagging indicator, but it's still an indicator nevertheless. Just bear that in mind. US dollar against the Mexican peso. Yet another indecisive spinning top yesterday, the third session in a row, as the market reaches crunch time tonight. Below we have support congestion at 1971.68, whilst overhead we have the neckline of the February to March head and shoulders top currently at 1994.36, and the April to May base congestion between 1985 even and 1995 even. So tonight is when the market makes up its mind. After all these moves down, up and down again in June, we are set to make a possible monthly key reversal here. If we close tonight, that's tonight the 30th, either over 2022.70 or under 1994.70, then we'd be on. Anything in between would mean a lesser outside month. Right now, we're looking at a monthly key reversal down. So far today, not much, as the heavy weight of tonight's decision continues to weigh on the market. It is starting to move up a little bit at the moment, but again, it's still within yesterday and the previous days range. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And now here comes the final bit.